Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Good morning everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Today we'll continue to talk about the euro currency, but today I offer you to take a look at the bit larger picture, and we will start today from the weekly time frame, because not all of you read our weekly research in the text form that we have posted on the ForexPeaceArmy.com, but the weekly time frame today is very important for the understanding of possibility on euro currency. As you know, the yesterday price action was really doom and gloom, and market show very strong plunge on the daily time frame and intraday charts. So this has happened due to a couple of things. First of all, the Greece makes a request for restructuring of a debt. Well, and as you know, the Standard & Poor's move the long-term credit ratings of United States on the review to with a negative forecast. So it tells that the possibility of decreasing the credit rating is about the 30% in the couple of years. So although this is not very big deal, because as you know, the United States has the AAA credit rating, but the fact that the credit rating of the such country as the United States has moved to the review by the leading rating agency, it's very important event. So on that news, euro has shown some strong plunge during yesterday's trading session. But let's take a look at the technical view of this possibility and on this price action. First of all, as you remember, the 145 area is a very strong area of resistance. It contains a lot of targets. First of all, 127 expansion from this ABC move, 618 expansion from this larger ABC, also 100% expansion from this ABC bottom. So a lot of different targets stands in this area. Also 144.16 area, sound right here, is the weekly is the monthly major Fibonacci resistance area, 618 resistance from the all-time high. So this area is very important and strong area of resistance. Although I thought that market could show some wash and rinse above the 145 and market makers should grab their stops that had been placed just above this area, that hasn't happened. In fact, this happens very rare when market makers leave public stops above the strong area. So, but sometimes it happens. Now what we see here, first of all, we see a bearish pattern, it's the evening star. Okay, although current wick is not, it hasn't but closed yet, but in general it looks bearish. From the other perspective, the red line, as you can see, this is the MACD predicted. It shows us the trend that based on the MACD, and it shows that trend will remain bullish until 145.35, 138.35, sorry, to 138.77. This is the weekly confluence support area, very strong area of support. Until that moment, in general, current move to the downside we can treat as a retracement in the long-term perspective. Although if you trade intraday or on daily time frame, current environment for you is definitely bearish. But if you're a long-term trader, you can treat current pullback on the market as a retracement in the long-term bullish move, and possibly if market will hold there about 140.89, 141 area or above this confluence support, when possibly in this case we can say that the long-term bullish scenario is still intact. At least trend remains bullish until this area. Well, if market will break this area to the downside and shift weekly trend to bearish, in this case of course we can treat current price action as bullish anymore. Okay, so what it could give us, first of all, look at this thrust. It's not very perfect, but still I think that this thrust is unacceptable for the possible directional signal. This could be a couple of directional signals. First of all, it could be the bread and butter. If market will break this green line, this is the 3 period simple moving average shifted forward for 3 periods. So it's a 3x3 moving average displaced. Okay, it's placed forward. So if market will break it to the downside and holds at this area, then possibly we could get the bread and butter context for the entry on the long side of the market. This will be the bullish kind of trade. So we should enter somewhere on this area. If we will see some buy signals on the lower time frames, on the daily time frame, on the 4-hour chart, if we will see some buy signals in this area, then we could possibly enter on the long side and market could continue its move to the upside. If market break this to the downside, then move back close above the 3x3 again, and I prefer this to establish new highs, and then returns back again close below the 3x3. This will be Jordan-Napoli double repo sell pattern, and it could lead to the deeper move to the downside, possibly to confluence support, or even could indicate the total shift in the market environment, total shift in the market behavior, and shift the trend to the bearish. So this is the weekly time frame. It's very important because currently we can say that although this sell-off is very strong on the daily time frame, in the long-term perspective it's just a retracement. So we can say that long-term bull perspective has been broken already. Okay. Now let's take a look at the daily time frame and what we could do during trading sessions on current week. First of all, as you remember, we have discussed this market behavior, and I said that two side-by-side inside days. This day is inside day for this trading session, and this day inside day for this trading session, because all range of these bars lays totally inside the previous trading session. I said that this is the pattern that indicates that market is building an energy, and sometime this energy should be released. Although I expect that it could be released to the upside, because I thought that market should take out the highs, grab the stops. That is very odds suggest that it should happen, should have happened, but this hasn't happened, and we see acceleration to the downside. This is energy has been released, so market building energy, and that has happened. Okay. Now, also we can see that market break this support line of this long-term parallel upside parallel channel. This is very bearish sign. Also, market has hit totally erased and disrespect this support and hit daily confluence support around 142 area, has shown the strong piercing of this area. Okay, so I think that in general during the second touch of this possible area will not hold and market could accelerate to the downside. I do not have any pivot points right here because all of them has been destroyed by the price action. Now MACD shows the trend turns bearish. It's a very good signal. Look at the angle of the piercing of the line of the MACD. So this is really strong signal. Like here also a strong signal to the downside. But this price action and this price action are different. This gradual move to the downside and this just plunge on the market. I think that short-term bias on the market is bearish, and the nearest target that market intends to reach and could reach this area 140.30 area, 140.80. This daily confluence support, by the way, this is the same level as on the weekly chart. It's right here. Okay, that's it. Also, as you can see, between these lines stands monthly pivot point for April monthly pivot point. So this will be support. Also, look at this blue line. Blue line is a Jordan-Napoli oscillator predictor. It shows us the level of oversold, and you can see that if market will reach this area at the nearest time, it will be oversold. So this will be a very strong area of support where market could show some bounce to the upside. And our trading plan suggests that we should try to enter on the short side of the market with the target around 140, say 50 area roughly. Okay, the middle of this range. So I something like that. I imagine this possibility for trading currently. Now let's shift on the 4-hour chart. What do we see here? First of all, this is the pivot points. By the way, you can see market totally negated, plunged even below the weekly pivot support too. This is very bearish move. This is breakout of this line. Okay, so what we see here, first of all, on 4-hour chart we can see a nice thrust to the downside. This could be nice context for the possible directional pattern. This could be double repo buy that could show some pullback to the upside, or that I prefer to see, this could be the bread and butter sell. The possibility where this bread and butter could start at this area of resistance. This is 3.8 resistance from the whole swing to the downside, 142.70. Okay. Also, this is previously weekly pivot support 2 and the range, the support line of the parallel channel, daily parallel channel. So I think that market, even if it will show retracement to this area, we can enter on the short side from this, somewhere from this level. Stops could be placed just above this area of resistance, 143.51. This is 618 resistance from the whole swing to the downside. Also, this weekly pivot support 1 that now becomes a resistance, and that's more important. You can see that 4-hour trend remains bearish till this area. Okay, so this level seems to me absolutely logical. Well, if your risk allows you, then you could place your stops just above the weekly pivot point, about 144.12. But this seems a bit too far for this possibility of trading. It's right here. Okay, so that's my current view on this situation on the euro currency. I think that the trend, that the short-term context on the euro is bearish, and we should seek for the possibility to enter on the short side of the market. I think that area 142.70, 143 roughly, this area is very suitable for this purpose, with the stops just above 143.51, somewhere above this area, because market is not oversold currently on daily time frame yet. Daily trend is bearish, 4-hour trend is bearish, so we could use the nearest Fibonacci resistance area to entering on the short side of the market. This pullback to this area could be in the way of the Jordan bread and butter sell, when the market shows nice thrust to the downside, then penetrates green line to the upside and reach some significant Fib resistance. In our case, this Fib resistance is 142.70 area. If the market will stop there, then possibly we can enter on the short side of the market with the stop just above this area. Okay, so that's my current view. But in long-term perspective, current moves could be just the retracement. Well, never mind. In current week, I think that we could and we will be trade on the short side of the market. By the way, those of you who trade Australian dollar and New Zealand dollar, there could be also some important trading patterns. For example, on the daily Oz, it could be the double repo sell, but it hasn't been confirmed yet. On the New Zealand dollar, it could be the bread and butter buy trade. This could also show some significant moves. So sorry for this long research. It's a bit longer than usual. Good luck to you, and be careful, control your risk.